We started? Whoops. My bad, guys. Okay. Well, sorry for the delay. So welcome back. So today's lesson is going to be sort of a continuation on liquidity. So I'm going to label this liquidity part two. And I have figured out, what I'm going to call this series actually. That's going to go along with my name a little bit. You'll find this a little bit humorous. But we're going to call this Mother Funded Training Camp. And like I said before in the first video, if I can spell, I'm not an English major, I'm a day trader, so get off me. Like I said, this is just going to be a basic, overall sort of guide. If this series kind of takes off and y'all like it and y'all want to learn more or want to know more, want me to go into more depth of certain topics, then I will. But this is basically just giving the person that I started out as trading would have wanted, like that type of information. That's basically all I want to do here. And I'm just now realizing that I misspelled liquidity. Y'all are probably commenting right now, this guy's a fucking idiot. He shouldn't even be teaching day trading. He can't even spell. Well, like I said, not an English major. Anyways, so today's lesson is going to be a continuation, like I said, of liquidity. And what did we talk about last time? What essentially is liquidity? Liquidity is basically where orders are resting. And where are these orders resting? They are resting above old highs and old lows. So, when we talk about liquidity, we want to know where is the highest probability of the areas of liquidity where price wants to seek. And so that leads me into what we kind of left off at, the previous video. I was going to say yesterday, but I don't know when these videos are going to be uploaded. So previous video, we kind of left it here. And I, kind of left it as the question of, if you had a stop loss, up here, and let me put the magnet back up here. If you had a stop loss up here, would you kind of feel safe if you saw price, was right here and you hadn't taken any profits, when price was down here? And me personally, no, I would not. I don't care. If I'm on a daily chart, let's say, I am an essential swing trader and my bellwether chart, which means the chart that I do my executions on is the daily chart, then no, I would not feel comfortable right here, if I had not taken any profits. And more than likely, I would have already rolled my stop all the way down here once I saw that swing high being made and this drop down here. I would have already been knocked out if I hadn't decided to take any partial profits at all. Anyways, let's just say hypothetically you're an idiot and you don't take anything off. You're just a one trick, you're one trick pony, you think this thing's going to hell and you're just, betting on it. Anyways, which is a whole different conversation. But anyway, so this is the area that I want to focus on here. And this is the topic of discussion. And, we're just going to label this really easily equal level highs. And more significantly, when there are two equal level highs and the high to the left, and you can actually do this one as well because these are very relatively equal. And I'll put actually relatively, I think that's how you spell that. Relatively equal highs in parentheses. I mean, not in parentheses. Yeah, well, in parentheses. Um, because, like I said, even though they are not exactly equal level, like these are almost exactly equal level, this is pretty close. And so that's why I label them relatively equal, and they can still be, very much a draw for price to come up and, trade through them. So as far as, what we're talking about here, and, like I said, especially when So especially when the high to the left of equal level is higher than the right. That is when you have a very, very strong confluence of equal level highs. When I say confluence, it's just a way to, read price in a sense of direction where you think it's going to go. It's going to help aid your trade. It's going to help aid in execution. That's the only reason I use the term confluence. So when I say confluence, that is what I'm meaning. So like I said, this is a great example. Like I said, we could actually shift this up here and we could include all these highs right here as, the next draw on liquidity because these are all in this area right here that I'm going to be shading with this box is a very, very large pool, meaning there is a lot of them, pool of liquidity, lots of liquidity. There's a lot of resting orders above these highs. I can guarantee you that. So what does the bank want to do? It wants to come up here and unseat the individuals that are already in the market and the people that have orders waiting here that aren't in the market yet. They want to trip those in so they can, create new orders. And like I said, that's the basic driving factor of the markets. So when we see equal level highs and equal level lows, let's see equal level lows. See, like these are equal level. Yes, they do get swept, but for the equal level lows, I'm gonna make a note on this one. We're gonna do this slash lows, and then we're gonna do this, and we're gonna do low to the left of equal level lows lower than the right. And I know it's kind of confusing in word format, but it'll make more sense. Let me see. Okay, see, here's an example right here. This is a good example, and this is a daily chart, so I mean, there's not too many examples as of right now, but we'll drop down into lower time frames and we'll get a better. So right here, we have these equal level lows right here. Actually, I don't want to use the horizontal ray. I want to draw this out. Let's do some drawing. Boink. There we go. Okay, so you see how this low is lower than this low. This can be qualified as a very strong draw on liquidity. I'm not saying that, this is also not a strong draw on liquidity because obviously, they're relatively equal. I'm just saying because this one is, you see how because if you notice how time goes, time flows from left to right. So if this one is higher than this one, that means they have not been traded through whatsoever. This one is higher than the one to the right, so this one has already been traded through. Yes, it wicked back up, so yes, it does want to come back down here, but this one is going to be stronger than this one. Just like, let's see if we can find a good example. See, the daily chart's not that. Let's go down to a lower time frame, see if we can. I don't like any of this. Okay, so we can use these two. So you see this swing high right here, and you see this swing high right here. Notice how it trades above it. It does trade above. It trades above it here, but it trades above it again here because why? Because if you look how the reaction that we have up here, yes, it stabs through it, but where does the close of the candle happen? It actually happens below the close of the candle of the first relatively equal high. So if you want a sort of rule of thumb, this doesn't happen always. This thing could have closed above, the close of this candle, had this small wick and still been driven through because obviously if we understand market structure, where is price gravitating towards? Higher, 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 higher. So we can already have an assumption that price wants to go higher in general. But good rule of thumb, if you see a high and it trades through it and it has a long wick, but the body, the close of the candle is below the body of the original high or the original swing high, then expect it to trade through it again and actually have a body close above the body of the first relatively equal high. Because as you can see right there, boom, body closed. So that is essentially all I wanted to cover today. Pretty simple, guys. So what you can do in your chart, and I don't care if you use lower ones or you use relatively equal ones, but just go in your chart and start marking relatively equal highs and lows. So we can see we have some right here. You can see we have those right there. I mean, those are valid. I mean, I technically probably wouldn't take trades off of these, but I mean, these are still valid highs and lows. Boom, we have these up here. These are great. And like I said, the lower time frames that you go into, the more examples you are going to find. Boom, perfect right there. And even you can classify that one because this is basically, all relatively equal. Boom. Where we have these two right here and this one right there. So, I mean, you can classify this. And you can do this one as well. Let's see, we got any others? I mean, these, yes. Well, okay, here's a good example where I mean, look how much time though. So, I mean, this is where I'm saying, if you have these relatively equal highs, I mean, obviously, you're not going to be expecting if price is way down here, oh, I see these up here, it's going to gravitate to up there. No, it's going to have a little bit of difficulty because you got this high, you got that high, you got this high. These are relatively equal. This would be a valid draw on liquidity, so we'll mark that. Boom. Oh, come on. There we go. Boom. So that is, a pretty good draw. And this right here. So you see how, you don't have to look very hard to be, whoa, that was weird. You don't have to look very hard to be able to identify these, strong draws on liquidity. Now, if you're asking me, RJ, these are relatively equal lows. Why did it not come down there and sweep that? That's a great question. That's a great question. Now, if you do a little bit of zooming out and we understand market structure and we understand the trend that we're following, where is it more likely to go? Is it more likely to go down or is it more likely to go up? It's more likely to go up because price has been gravitating up for days. I mean, this was the longest downtrend that I could see in this whole market structure that we're looking at. So we understand, not everything is a panacea, not everything is end all be all. And just because you see relatively highs and lows doesn't mean they're going to get swept, within the time that you want to be trading. All we need to understand is that this is a high probability area that price wants to gravitate towards. So let's go back up to the daily chart real quick. So homework for everyone is and I'm going to start giving homework for everyone and comment, if you did your homework or not, because I'm going to be checking up on y'all and making sure y'all did it. So identify 5 examples of relatively equal highs, and then identify 5 examples of relatively equal lows. And mark up your chart. Feel free. You can do more. You don't have to do just 5. You can do more than that. But you'll notice, once you mark them and you start to track, price, Like, let's go down to even a lower time frame right here. Let me go back. So if we, notice, these relatively equal right here. If you want to call these relatively equal, I'll call it. That's a pretty good example, relatively equal right there. If you notice right when they get swept, what do you see? Whoosh. Nice reaction. Very, very nice reaction. Here's another set right here. Forgot to change the color. Hold on. What else do we see? Boom, another great reaction. So, like I said, it doesn't, always happen, but more than likely, whenever we have equal level highs and equal level lows that are swept, we are going to more likely see a reaction. Now, this doesn't mean, automatically reverse and press buy or sell whenever relatively equal highs and lows are swept, but this will give you a better understanding of where price wants to gravitate towards. So if I missed anything or if something is unclear, please leave me a comment. I will do my best to answer them. But I think I think we're good on the relatively equal highs and lows. I'm trying to think of if there's anything else that we need to cover before we actually get into some price displacement arrays, or what I'm going to identify, or I'm going to classify them as PD arrays. I'm going to shorten it. PD stands for price displacement arrays. And this is where, things start to get pretty juicy. Um, and it starts to get a little bit, more difficult, but don't worry. Like I said, we're going to break us down into, as simple language as I can, because I understand, when I do use this terminology, it's hard for people to follow it because if you're not already familiar with this, you sort of get confused by it. But anyways, um, let me know if there is anything else y'all would like me to cover. But until next time, we will see you for the Mother Funded training camp.